we have with us a very special guest, Sunil D'Souza, CEO of Tata Consumers, now joining in. Mr. D'Souza, thank you very much. Thanks a ton for joining us today on the show. Firstly, congratulations. FY25 is behind us. You've had managed to pull out quite a good quarter. A couple of areas that we'd like you to start with. Firstly, of course, comment on the quarter behind us. Revenue was largely in line with street expectations. Margins have seen an uptick. International business is finally picking up. And you've got those substantial acquisitions as well now behind you.
Yeah, so thanks for having me on the show. And yes, we had a pretty decent quarter and a good end to the year. 9% top line, 22% EBITDA, profit before tax, before exceptionals, plus 46. I think what the reported numbers would be net of we had a stamp duty on account of the merger with Tata Coffee and some prudent provisions that we took for underutilized assets as well as a financial instrument. Other than that, like you said, I mean, all businesses on growth. That's pleasing to see. We've had 2 months of Capital Foods. With that, the foods business is powering ahead with a 20% top line growth. International, we've always said it should be margin should be accretive to the India business, and they've come to the party now. Very strong numbers. Canada was always strong. UK very strong numbers. US is also turning around the corner. Strong growth in our growth businesses in India. Most importantly, our EBITDA margins for the quarter came in at 16.1%, which was pleasing. We've always, last quarter we said our new benchmark is 15 plus, and this quarter we delivered more than that. The good part was we've reduced working capital. Cash has grown at 27% versus last year. Cash as a percentage of EBITDA is 101%. So we reduced working capital substantially. ROC 280 bips ahead of last year. Strategically, shares more or less on track. Outlets now 4 million. Innovation firing well, 5% plus. Costs well within control. Distribution expansion on track. So all in all, a pretty decent quarter.
It's pretty holistic in that sense. I want to start with one area that we were trying to understand. And, when you talk consumption, we're all asking the big question, is there a concern or is there worry when you talk about rural consumption picking up? Now, while the numbers for you look in line with what you'd set out for yourself at the start of FY24, like-for-like volume growth is not firing up. And this is not, of course, only for you, but as a market leader, give me a sense of when we can see that. What's happening on the beverages piece? What's happening on rural volume growth? Are you feeling there's a little bit of pressure, or getting into FY25, we should see a substantial pickup?
So let me separate it out into two pieces, right? One is a specific category point and one is the whole rural point. And the reason I'm separating it out is because for salt, for example, we've always guided for a short to medium term growth of 5% in terms of volume and a couple of bips on top of that in value. And this quarter we came in at 4. So salt broadly back on track. Beverages under a little bit of pressure on the volume, but there's also a base effect and multiple other factors playing in. We've seen value growth come in. So I'm sure with the actions that we put in, beverages will come into growth. We were at a 3%. So it's not that this quarter is a continuing string. We were seeing a 3% volume growth. It's only this quarter that it's coming at a flat. On rural per se, I hear the general chatter about FMCGs, rural, etc. But just like to point out that Tata Consumer is in a different place. We were always under-indexed on rural. And one of the things we've gone about is expanding distribution in rural. We've just appointed 1,000 plus distributors in the last 1 year. So effectively 3 distributors per working day, if I may, and 1,800 salespeople. This is to expand distribution down the pop strata as well as expanding bandwidth at the front end in metros. Now, when I break down our numbers, for us, rural growth is 8 and urban growth is 8 in India. In fact, in metros, we've grown at 6 and 50,000 to 1 lakh population towns where we've appointed distributors has grown as 9. So for us, it's a different story. Overall, I do think rural is coming back. I would think another quarter or so, you'll see it coming back strongly. But for overall Tata Consumer, my opportunity is in expanding my distribution and share in rural. That's where we stand.
That's interesting. Well, looking ahead, what is the sort of guidance you're setting out for yourself and for the company for FY25, especially given that there would be complete integration of the recent acquisitions made and revenue accretive 100%, I'd imagine.
Yeah, so effectively, I think we've always said we'll target double-digit growth and EBITDA ahead of our top line. I would say first starting with EBITDA margins, I think we said 15% is now the base and we'll grow above that. That's number one. Number two, on the top lines, obviously now with Organic India being completed just recently, Capital Foods, about 2 months of integration and more or less integration almost complete. Now it boils down to value creation and growth. Earlier, we used to have a growth business classified as ready to drink, Sampann and Soulfull, and we had guided for a 20% contributing to 20% of my portfolio growing at 30. With Organic India Capital Foods coming in, we are now guiding for 30% of the portfolio, which is growth businesses growing at 30. On beverages and salt, which is the core business, I would say broadly, we're saying mid-single digit volume and a couple of bips on that on value. On salt, we've already delivered that similar number this quarter. Beverages, we're confident that we will come to that in FY25. And international, we've always said mid-single digit top line and EBITDA margins ahead of India.